Amir, it's early 2018. It's always good to be with you. There's been some developments in the uranium market recently that a lot of people have thought were going to happen for a long time that could provide some upside to a spot price that has been debased since Fukushima some 7 years ago now. What do you think about the production cuts that have been announced from Cameco and from the world's largest producer, Kazatomprom, at 40% of global supply?
Well, I think it was a year ago in early 2017, and you and I had similar kind of conversation, and we kept talking about how the uranium price had gotten so low that no one could make money anymore. We even had a name for it, no man's land. It's just, it really is that $20 environment. And look, kind of as the saying goes, I mean, bear markets are the authors of bull markets. Things get so bearish and the prices are so low that ultimately the cuts have to happen and the production cuts have to be meaningful. It took longer in uranium because many of the large uranium producers had long-term contracts signed from 5 to 10 years ago that were still giving them a cushion, a hedge, at a higher price than $20. As those contracts are rolling off, and a significant amount of them have rolled off now, everyone is now staring at this $20 per pound uranium, which doesn't work. So that's why it really, I think we're coming into 2018 having turned a corner. And that is these major cuts announced by the world's top 3 producers, but namely Kazakhstan. I mean, the Kazakh are a single country OPEC, 40% of global production. They announced 2 rounds of cuts last year. And I think for the longest time, Nick, that you and I have been talking about the recovery in the uranium market, the recovery was always discussed in the context of demand improvement based on Japan restarting reactors.
But now we're taking supply off.
Now it's the other way. Now the story, I think, is really tilted towards sharp drops on the supply side with the Kazakhs, which is much more meaningful. This, I think, sets the stage for a rebalancing of the market. We could very well be looking at a supply deficit this year. At the very least, I think the market will be balanced as opposed to oversupplied. And this could be the turning point.
Now, I want to talk about UEC, but I want to talk about Kazakhstan a bit more because we always say nobody pays attention to this Kazakhstan deal. Let's make them pay attention. Tell the audience what it means. So, a couple of years ago, the U.S. was 60% reliant on foreign oil, and people were throwing their hands up in the air. When it comes to U.S. Uranium supply and demand, I think they need something like 46 or 47 million pounds a year, and they produce less than 2. So the United States is 96% plus reliant on foreign sources for their uranium, many of which are, controlled by Russia or Russia influenced. So, dot the I on that for me. Tell me why that's so important, and maybe put it in context of the Saudis and oil.
Well, I can put it in the context of what someone like Spencer Abraham thinks of it. Spencer Abraham is the chairman of our company, and he's the former U.S. Energy Secretary. When he became Energy Secretary, the U.S. at the time had lacked a national energy plan. And he devised and implemented the first national energy plan, which actually focused on energy security. And at the time, you mentioned 60% dependence on oil. At the time, the U.S. was importing 60% of oil requirements, and everyone thought this is a national disaster. Mm-hmm. Fast forward to uranium, and it's like you say, 96, 98%.
Crickets.
So this is basically a dire situation. I think it's now becoming more widely known and recognized in Washington, D.C., that nuclear power is a critical part of the energy infrastructure in the U.S., 99 reactors operating, supplying 20% of U.S. electricity, and 98% of the fuel needed to run these reactors is being imported. This, from a supply chain management point of view, doesn't matter if it's nuclear power or anything. It shouldn't be that much reliant on imports. And so the numbers, again, are very compelling. So there's 50 million pounds of annual demand in the U.S. And this year in 2018, U.S. uranium mining industry is on track to produce less than 1 million.
Historic lows.
The last time there was this much production was 1949. How ridiculous is that? At the same time, you have the Department of Energy who's come out and said, hey, in order to have a reliable grid in the U.S., we need nuclear power because of space load. So I think this is a really key development in the U.S. I think that federally and at the state level, policymakers and political leaders recognize this issue, and there will be more or less in the spotlight. And what I'm really excited about is how we're positioning Uranium Energy Corp, UEC, to be the leader, to be the company that can lead uranium production higher. And Nick, you know this didn't happen overnight. We have taken 13 years to put the building blocks in place to be in the position to seize on this opportunity in front of us right now.
Yeah, it's a very US-centric story, and I think it speaks volumes about what you were able to do to attract a former energy secretary to become your chairman, and Spencer Abraham. And in a very real way, for the reasons we just talked about, uranium production in the United States has to increase. Can you talk about how Uranium Energy Corp is positioned to do that with their hub and spoke program that you put together in Texas and some other assets that you've acquired recently?
The key building block to our strategy is utilizing the in-situ recovery method to mine uranium. This is the lowest cost way of mining uranium, and it's the most environmentally friendly way of mining uranium. And the geology has to be amenable for this kind of mining. And in the US, the two key areas for this kind of mining are South Texas and in Wyoming, especially in the Powder River Basin of Wyoming. We now have a large base of fully permitted projects for production of in-situ recovery in both Texas and Wyoming. In Texas, we've been there longer. And in South Texas, we have our hub and spoke, as you mentioned, where in the last 13 years, we've put in place, we have our fully licensed and built processing plant. We have 3 projects with mine permits for production. We're drilling, we have databases. We really have the leadership position in that area. And last year, we were able to get into Wyoming with the acquisition of the Reno Creek project, a project that had almost 3-decade history of drilling and development. But the last 7 years were critical for it because the permitting started and it became a fully permitted project. We have a license in Wyoming for 2 million pounds per year production using in-situ recovery at Reno Creek, about 22 million pounds of measured and indicated resources there, 43-101. And in South Texas, at our Hobson plant, we have physical capacity of 2 million pounds per year and projects around it that we're growing through drilling and existing resources. Nick, you can figure that out now. So U.S. production today, all U.S. production, is expected to be less than 1 million pounds. UEC has the building blocks to go from 2 million pounds in South Texas, another 2 million pounds in Wyoming, to lead the way and become the dominant player in U.S. uranium mining. And that's just the beginning. We're not talking about the exploration upside of our project and various other projects we have that are not permitted yet, but clearly we've demonstrated that we have the team and the know-how to permit, to increase resources, both organically through exploration. Last year we drilled 130 holes. This year we plan to drill another 130 holes. We are one of the most active and one of the most aggressive companies, and I've been speaking with you about this for so long, and I just want you to know, we are going for the mantle. We are going for the mantle of being the largest player in the U.S. uranium business, and I think that's an exciting business opportunity.
So you got everything set up. For all intents and purposes, you got your processing plant, you've got your permitted mines ready to go, and you're ready really just to flick the switch and turn it on. And that's the last question I think I want to ask you. Some other uranium companies have continued to produce while uranium prices have been call it subpar, but you took a different tact. You decided to turn the spigot off, to not produce, and remain unhedged. Unhedged might be a loaded word for retail investors. Can you tell them what exactly that strategy is and why you did it as a sign-off, just to put a bookend on what UEC is all about?
Just about every uranium company that can produce in the world has signed long-term contracts with utilities that need uranium at a fixed price. That means if the uranium price goes to $100 a pound tomorrow, most guys are locked in at $40. We always felt that was counterintuitive to the kind of upside we wanted as the largest shareholders of the company ourselves to the uranium price and to the upward move. Hence, we're 100% unhedged. No contracts with anyone, no fixed pricing, no ceiling, maximum exposure. And that is also what I found crazy about mining out a resource at the bottom of the cycle. The same mine, and Nick, I've lived through this. I lived from day one to the day we got our permit. I saw how long it took to get a permit to mine uranium in the US. Minimum 5 years. Sure. So the same project that is taking you 5 years to permit, why would you mine out at the bottom of the cycle and get a much lower return on the time and money invested, as opposed to keeping the company lean and mean, focused on development, not depleting the resource at the bottom of the cycle, and having that full exposure, 100% unhedged? That's been a cornerstone of our strategy. And frankly, that's what's attracted many of the long-term backers that we've gained, whether it's Li Ka-shing out of Hong Kong, the wealthiest person in Asia, people like Rick Rule of Sprott Asset Management, even big names like JP Morgan Asset Management, they've looked at this strategy and have said this is really the way to play the uranium market. And I think we've seen the strategy kind of build its own place in the uranium market. And hey, the utilities may not like it because they prefer to sign that contract and know the uranium is going to show up at their doors. I don't really care what the utilities think. I'm focused on the return for my shareholders, and myself as the largest individual shareholder, we're very much thinking about the equity and how we create the maximum value.
Well, it'll be fun to watch when the uranium price rises to a level where you can produce profitably, and then the utilities have to sign contracts at much higher prices. So it doesn't
Looking
look
forward to that.
That might not be too far off, Amir. So thanks for the update here in early 2018. I'm looking forward to watching the uranium market gain its legs and to UEC capitalizing on that in a big way.
Thank you, Nick.